As we enter the final month of 2021, there's a new specter hanging over the markets. What's driving markets into the red, and will there be a Santa Claus rally? That's where we start on this week's Fastest 4 Minutes in Finance. Hello again, I'm Scott Inman. Well, the stock market has given up significant gains in the past week. In fact, last Friday was the worst single-day pullback of the year for the Dow Jones Index. The cause, according to many analysts, is the mysterious new COVID variant coming out of South Africa, which we still know very little about, and fear, unfortunately, can be a driver of the market, at least in the short term. It's always good, though, to remind ourselves that equities are long-term investments, and keeping a long-term perspective can help us as investors. Take a look at this chart from LPL Research. These numbers are from the end of Thanksgiving week. The one-week numbers are scary. The major equity indices are off anywhere from 2 to 5% in less than 4 full days of trading. And that single week in the red erased most of the gains of the past month. However, if we look at the far right-hand column, there's our perspective. The S&P 500 is still up over 24% year to date. The Dow up nearly 16%. The NASDAQ is up over 21%, and the Russell 2000, which is made up of small cap stocks, is up more than 13%. It can be easy to look at a monthly statement and think things are not going well, but looking back, in this case, just 11 months should ease our stress. And if you expand that time horizon even farther, it looks even better. As we head into December, we are facing a headwind in the form of COVID that we'd never even heard of before 2 years ago. But with history as our guide, it would be a bad bet to think things will be bad in December, especially when the previous 11 months of the year have been strong. Take a look at this chart from LPL Research. These are years in which the S&P 500 index was up over 20% through the end of November. There are 16 years listed there, and in only 4 of those years was the index negative in December. And it's been positive in 8 of the last 9 years, or 9 times, I should say. On average, it's been up 1.7% in those years, which is a little higher than the December average in all years. And if you look at those years, we certainly faced some headwinds in many of them. And one more historic note from our friends at LPL. December has only been the worst month of the year one time. That was in 2018. This year's worst month so far was September. It was down 4.8%. Of course, past performance does not guarantee a repeat of the future, but believing is important around Christmas time, and that should include believing in the long-term potential of the stock market. Thanks for watching.